Hey, Scott, first of all, man, thank you so much. I know you're probably getting inundated with all kinds of questions about the quarantine and how do we do loans during the quarantine. And Emily and I just wanted to really sort of pick your brain this morning. You're always our resident expert that we go when we get stumped. It's like, call Scott. That's how we do. When Scott starts talking, we start listening because it's always good stuff. You've always helped us, and you've helped a ton of our clients, and we're just extremely thankful for how you guys lean in and really help us so much, Scott. So
thank you very much.
Real quick this morning, we really got three things that we have just been getting a lot of questions about. And the first one really is, what is forbearance? I mean, everybody there's so much information out there. So could you just quickly tell us this morning, what is forbearance and how do we get it?
Well, that's the thing about getting it. It's a whole lot easier than it was than getting your mortgage. To get the mortgage, you probably had to verify everything in triplicate. Pretty much at this stage of the process, the borrower would call their loan servicer and say, I'm affected by the coronavirus. And they're going to put them in forbearance. And the minimum time is 3 months. Some companies are going out to 12 months. For example, Evergreen chose 6 months on the forbearance. And I'll get into the forbearance just a little bit more, but why did we choose 6 months? Probably, who knows? Nobody's got a crystal ball. We think we're going to be out of this in 3 months, but we don't want to redo all the paperwork and have people jump through hoops again just to keep the process going. Because you can come out of forbearance at any time. And what forbearance is, it's basically just no harm, no foul. You don't got to make your payments right now. The problem I think our country may have is that that's all they heard. What they're not hearing is you still owe that money. And when you come out of forbearance, it's all due and payable. Now, what people need to do is during the forbearance, pay what you can. If you get a 6 month or a 12-month forbearance and you come out of work earlier, just pay what you can during the forbearance period and then be prepared to accumulate all those funds. What is likely going to occur is there's going to be a whole lot of people and they come out of forbearance, they simply don't have the money. Then we're probably going to have a huge amount of there's a waterfall of options that loan servicers are going to offer buyers. Some of them is a little bit of a repayment plan. A lot of them probably do what's called loan modifications. That's that scenario that we've heard in the past that was not a fun process. Here's the thing about the forbearance. All you got to do is call up and say, hey, I'm affected by coronavirus. I need to go in forbearance. Loan servicer is going to grant that. Then when it comes time to come out of forbearance, if you don't have all the money to pay it right then, and you want to go into a loan modification, now you're going to have to do something different. You're going to have to do what you did when you got the loan. You're going to have to prove your financial situation. You're going to have to prove why you can't pay it, why you're eligible for a loan modification. And that's where I caution people that if you can make payments, or you could have during the process, please do. Because it's all going to come to light, so to speak, when it comes time to pay the piper. And it's the right thing to do. Just like when you go to the store, don't grab 18 packages of toilet paper. Just do the right thing, grab a couple, suit your needs, and move on.
Absolutely. And I think that that clears up a lot, as far as a lot of people have almost mistaken forbearance as forgiveness, and it's not.
And not everybody's going to hear this message. Share it with your friends, family, coworkers, everybody. Just said, hey, understand the forbearance is not a free pass. Not at all. Yeah. And what everybody needs to understand, I'm sorry for keep talking, it's what everybody needs to understand from the mortgage companies, because we're all in this together, is that when a borrower doesn't make the payment, the mortgage company still has to make the payment. You say, well, what do you mean? I pay myself? No, pretty much all loans are sold usually to the agencies. For example, FHA, VA goes to Ginnie Mae, conventional goes to Fannie Mae and Freddie Mac. The lender still owes the money. So when they go into forbearance for 6 months, the mortgage company is keeping those payments current. They have to. And so it's important that everybody understands that every little hit that we take across the land is going to affect everybody.
I understand. I'm glad you said that, Scott, because really, I think you hit on it. I think people think that they're literally getting to take a 3 months, 4 months, and they don't owe that money. So they're not thinking that they have to owe the money when they come out of forbearance. So I'm glad you said that, and hopefully this will clear it up a little bit.
Yeah, you don't want people to have. It's tough enough times we're going through right now. You don't want to have a lot of grief when you come out of forbearance and people try to deal with the frustrating process of loan modification or actually even losing their homes, because unfortunately that probably will have some of that will occur.
Right. So the second thing that really is just, I really think this is probably the question that we get the most of all. Forbearance is probably the second of all because they've heard it so much on the news. But the first thing is, what is going on with interest rates? There seem to be one day they're great, one day they're scary. What is going on?
That is the question of the day. The big driving factor is what they call liquidity in the market. It's really this simple. A lot of people like to get a mortgage. Nobody wants to buy one. Mm-hmm. And if you can't sell, what people don't understand pretty much across the land is what determines if your loan is approvable for the majority of the part is if it's sellable. So even though you close your loan and you continue to make your payments to the mortgage company you closed your loan with, what goes on behind the scenes is the mortgage company sold that loan, but they retain the servicing rights. Mm. So the problem is with liquidity, if nobody wants to buy a mortgage, the best analogy I can do is rotten fruit. We're going to the market and selling rotten fruit. If you walk into the market with some banged up, just bruised up fruit, it's pretty hard to sell. And there's no way to sell that. So usually the only way to sell that is maybe take the lemons and put some sugar on it and make lemonade. You gotta make it better. And the only way to do that in the mortgage world is to raise the interest rates. So what happened a few Fridays ago, and this kind of flew under the radar, is the rates spiked up well over 5%. And people are hearing, oh, rates should be 2 or 3%. No, they actually spiked way up there. And Trump stepped in and bought $100 billion worth of mortgage-backed securities in one day. In one day, those rates came back down into the 3s. So that's a great purchase, but we have trillions of dollars worth of mortgages going on. So the government has agreed to continue to buy rotten fruit. Otherwise, we probably would have extremely high interest rates right now in the world, the economic world, from the real estate and mortgage standpoint, would be totally upside down. So they've agreed to continue to buy mortgages or rotten fruit, whatever you want to call it. They're not just buying anything. Having rates super low has actually kind of hurt the market. So before the markets got too upside down, there was so much loan volume activity, it had a negative effect on interest rates. So what the government is doing is they're still buying the mortgage-backed securities, but they structured exactly what they're going to buy. So what does that mean? That means that they've kind of stabilized the interest rate market. Where are we on the interest rate market? You can still get some loans in the 3s. And in some cases, even in the 2s, but that's fleeting because it is still rather volatile going up and down. Not as extreme as it was before. They sort of stabilized the market. So it's still, my personal opinion is that it's been such a seller's market for so long. Buyers have had to literally compete to get their offers accepted. If they're comfortable with buying and their income is okay through this coronavirus process, my opinion is it's probably a good time to buy. Who knows? Hindsight is 2020. Who knows how all this stuff may or may not affect values? But the general consensus is we're going to get back to work. And we're going to get back to work here in the very near future. And things are going to start moving along. And right now, the sellers, you may get them to maybe concede a little bit on price, or more importantly, in my opinion, concede on paying closing costs. So if you can get rates down in the 3s, maybe get the seller to help out with your closing costs when you couldn't before, it's something that folks should entertain the idea on, my personal opinion.
Yeah.
Well,
Great.
and I think that feeds perfectly into the last thing that we wanted to talk with you about. And that is, so for the people that were thinking about buying either now or sometime this year, and now they suddenly don't have a job. How does that affect their buying power for the remainder of 2020?
So here's what the agencies are working fast to address these concerns. Here's the general consensus. We're in Vegas, take a casino worker, got laid off from work. They typically, casino workers, if they're in the tip industry or have variable type of pay, such as tips, commissions, or bonuses, then their base pay is easy to figure it out. But we have to average that other variable pay over a 24-month average. So what we'll need to do, and even also for those folks that don't work full 40 hours, they're not just kind of maybe 30, 38 hours each week, we have to average their hours. So what we'll do in the lending industry is we'll take out this block of time that they were out of work so that their average is not affected. So, and also if they're getting any forbearance in other areas, such as credit cards or student loan payments or whatever, there should not have any derogatory payments. But again, when we come out of forbearance, it's time to do what you did before you went into forbearance. That's pay your bills on time as agreed. That's really important. So there's going to be new information, just like a lot of stuff in our world right now. Information seems to be coming out daily. But the agencies are trying to get out in front of this to prepare to get the country back on track with financing for those folks that are out of the loop and work.
Awesome. Well, thank you so much for taking some time out of your Friday to figure this technology thing out and chat with us.
You betcha. And the one thing that I would encourage people to do is, it's some terrible times that we're going through, but, I've heard lots of things about the silver linings of, hey, I've got some good quality family time, spending time with your kids and, maybe working on some projects. Another thing to do is during this time to slow down and think is, what money can you save during this time? Now, some people say, hey, what I can't save, I'm not earning. Well, not everybody is out of the income loop. Some people just got reduced income, but hopefully your expenses are not going down as well. Stay off the internet buying thing. Don't use buying to relieve your boredom. That's an important thing to keep in mind. Yeah, Amazon's just too easy to buy stuff. But that's something to think about. Maybe Google a thing. Start getting to know your numbers. It's interesting how when I talk with people, they don't understand what the real numbers are. A simple tool that I do with people is take your last W-2. Don't look at the gross income because you get an illusion of maybe what money you really have. Go look at the net income and divide it by 12. That's what your real monthly income is. That's what you're really living on. And make your decisions accordingly. And then another thing to look at is look at your net income and divide it into the gross income. See what percentage of your check you actually get. So going forward, when you decide, like, for example, if you're only getting 75% of your check, well, if you want to go take on a $750 payment, you have to earn $1,000 a month to do that. Yeah. So you can back into the number to see it and get real numbers based upon what your current reality is. So that's the one thing that I've encouraged people to do is be smart. When we come out of this, are we going to come out like a rocket ship or are we going to come out slowly? I've heard both opinions going either way, but whatever we do, take time to be smart and be frugal during this time and understand that we may take a little bit of time to get back up to where we were before, and be smart and just handle your money accordingly.
Yeah, I agree with you, Scott. I think that's a good word. Hey, yeah, we really appreciate you taking some time out. Man, thank you so much for clearing this up for us. And we will talk to you soon.
Yeah.
And thank you for inviting me. And I actually put on work clothes today. In my office, I've designated Friday as pajama day since 55 of my 60 coworkers get to work at home in their pajamas and probably underwear. So I've designated Friday, not casual day, but pajama day. So as soon as I get out of this interview, I'll be putting on my pajamas.
All right. Well, you tell the team that we said hey, and we said thank you for everything you guys do for us.
Thank you much.
All right.
Have a good day.